Hi guys, this is 𝐂𝐓𝐿 and welcome to ATS, India's leading broking house, which provides free intraday as well as delivery trades both for free. So in Hindi there's a popular saying that बाप बाप होता है और बेटा बेटा होता है, meaning that father is always a father and son is always a son. So, but if son achieves humongous success in his career, then it will bring a cherishable moment for the entire family. Now, holding company is like a father who has investment in the son company, that is the subsidiary or associate companies. So here in the example, Godrej Industries is a father or a holding company which has investment in Godrej Agrovet around 60%, which becomes its subsidiary company, 45% in Godrej Properties and 24% in Godrej Consumers. So Godrej Industries becomes holding company, that is the father company, and its subsidiary, that is its son company, will be the other companies who are its subsidiaries and in which it has ownership or stake. Generally, a son is very young, energetic, so he will get aggressive valuation, that is the premium valuation in the market also. So suppose a son company is trading at 100 crore market capitalization, and if the father company has 100% stake in it, full complete stake in it, then the father company market capitalization should also be 100 crore, but it will be trading at a discount say of 90%, and it will be trading at 10 crore market capitalization, means 100 crore of that 90% discount, means the market capitalization of father company will be 10 crore only. And if the son company becomes 1.5x in next 3 years, then its market capitalization reaches to 150 crores. And if the discount between the father company and the son company narrows down to say 80%, then the value what the father company will get will be 150 crore. Of that, if you do 80% discount, you will be getting 30 crores market capitalization of father company. So the father company, that is the holding company, has become 3x in 3 years, whereas the son company has become only 1.5x. So like that, instead of investing in subsidiary, sometimes if you invest in holding company, you can get more returns than investing in subsidiary company. But one thing to be remembered is that holding company will always trade at a discount of nearly 30% to as high as 90%. So you should be careful at the time at which you are acquiring. And the primary reasons of why holding company is trading at a discount is that because when the holding company will sell its stake in subsidiary company, there will be tax, capital gain tax will be levied on the holding company when it will sell. Secondly, holding company will always trade at liquidation discount because holding company will never sell generally its shares. Because how can you expect Tata Sons to sell all its stake in Tata companies? Because then it will lose its ownership only in Tata companies. So that's why holding companies, even if they're getting profit, they will generally not sell their shares, and that's why they are generally available at a discount. For example, one of India's oldest holding company which is listed in stock market, that is Bombay Burma Trading Corporation. It has many subsidiaries, and they are like, you have Britannia Limited, then you have Go Airlines, then you have Bombay Dyeing, and it runs its own business of tea and coffee plantations. So if you observe Britannia Limited, which is the subsidiary of Bombay Burma, the market capitalization of Britannia Limited is humongous 82,000 crores, and the Bombay Burma Trading Corporation has nearly 50% stake in Britannia Limited. So the market capitalization or the investment value of Bombay Burma should be around 50% of 82,000 crores, that is 41,000 crores. But surprisingly, the BBTC is market capitalization is 6,100 crores only. and this means it is trading at a discount of nearly 60 to 70% when compared to Britannia. And in addition, it also has holding in other subsidiaries as I mentioned above. So if I include the valuation of those companies also, that is Go Airlines, Bombay Dang, etc., then it is trading at a discount of nearly 80 to 90%. And also, let us check the return what the investor could have gained by investing in BBTC Limited rather than investing in Britannia, because Britannia is its subsidiary company. So instead of going directly to Britannia, you can go indirectly by investing in BBTC. Let us check how much you could have earned by investing indirectly or through a shortcut or by buying at a cheaper price by investing in BBTC. So share price of BBTC back in 2016 was around 320, and in August 2020 its share price rose up to 1462 rupees. So BBTC has given a return of 456%, which is amazing. And during the same period, Britannia gave a return of 288%. That is, its share price rose from 1323 rupees to approximately 3800 during the same period. So it means that sometimes it is smart to invest in holding companies rather than investing in the subsidiary company directly. But now when the market is crashing due to the inflation crisis all over the world, BBTC has crashed heavily, and the return which Britannia has given over 5 years is more than BBTC. So what does this mean is that you cannot always invest directly in holding company. You need to be smart, that is the time at which you are acquiring it, because holding company usually trade at a higher discount during the bear market and the discount narrows during the bull market. So when you are buying is important, because if you have bought at bear market holding company and the discount narrows in the bull market, then the return which you will get will be higher, as stated in the beginning of the video in the given example. So yes, to conclude, one can buy the stock at a cheaper valuation by investing in holding company, but he needs to be smart of the time at which is investing, because minimum discount of holding company should be 80%, that it should be trading at a discount of 80% when compared to its subsidiary when at the time of acquisition. And also the person who is investing in those companies should be aware of the subsidiary. He should have good knowledge of the subsidiary when he's investing in holding, then only he should invest in holding. So I hope you liked our video, and if you did like, do like, share and subscribe to our channel, ATS channel. Thank you.